Okay, it's Sunday the 27th of November, so let's have a look at the Australian dollar, US dollar for the trading week ahead. Okay, so first thing is we have had the very strong downward move, which we have gone over. It's after the market broke out of our ascending triangle. Let me just turn this black. The market has came down very, very strongly. Now, we then began to see a retrace. We got the retrace, which then rejected right here on the 23rd. Now, what I was saying after this, basically to subscribers, was that I was expecting a stronger pullback than what we had currently seen. It's important when you're looking at price action. Too many traders read textbooks or they watch all these videos online that basically say you just want to look for pin bars. They see the pin bar, they think that means the market is going down. They enter either as soon as the pin bar forms, or they enter when the market breaks the low, like right here, and then the market moves against them. You need to do an overall analysis of the market. Just relying on candlestick patterns is it's not enough to trade off of, unfortunately. So anyway, we've started to see the market pulling up. Let's have a look where we can watch for potential targets for this pullback. Okay, so, oops, let me delete this. Okay, first thing is we want to look for our key levels for pullback. Well, right here is going to be one clearly. It's where the market stalled, sitting right on the MA200 and then fell down. So, in fact, we can come all the way down to here. With this, it's lining up with the 50% Fibonacci retrace. This is a strong level of resistance. Also going to go over the sloping support and resistance line. I've mentioned this a few times. Quite often when you break a trading pattern like this, price action wants to return and retest it. If it does get up here, it's going to be good to watch for sell positions. Now, where else are we going to look? Let's have a look. We have one right here. It's actually lining up almost perfectly with the 38.2% Fibonacci. This is a potential level also. To watch for the market to begin seeing bears stepping back in. Those are the main areas I will be watching. So right here, and definitely if the market gets up into the sloping support and resistance area. We've already seen the bounce coming off of key levels. Last week we went over these key levels down here. You can actually see where do we bounce off of. Let's just mark it in. And then you can come down to here also. The market has came down, it's bounced off of these key levels. You can see it has reacted multiple times. Back here also, the market falls down very, very strongly. This is where it bounces and hesitates, and then comes through, comes up, it retests, it's testing here, 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 it's testing down here. And then as it breaks up, it's coming down and testing these levels also. This is why we were looking at it as strong support. So, next week, I'm wanting to see how the market reacts. First of all, I want to see the retrace. If the market gives the retrace, a further bullish move, coming up into the key levels up here, and potentially up here. If the market then reaches these levels and starts to come back down once again, I will again be looking at these key levels of support for those bullish bounces. The market currently is clearly negative. We've broken out of the ascending triangle, came down very strongly, broken below the MA200, which is also a negative sign. So the overall bias is currently negative. Okay guys, so as always, I hope that was helpful. I hope you all have a good trading week next week. I'm James Orr, and thank you.